Good morning, everyone. Thank you for taking time to attend our webinar this morning. My name is Trent. It is my honor to be your first speaker of the day. Within the next 15 minutes, I'm going to share with you three things. The first one, I would like to share some information and insights about the recent survey conducted by Deloitte and others. The second thing is about what are the expectations from the management on finance and accounting nowadays. And the last one, I just try to provide a little bit guidance on how finance and accounting can respond to these expectations. Let's start our today webinar with two simple questions about how you all have been doing these days. First questions of the day. Have you and your organization submitted your monthly, quarterly, biannual report on time? This is a simple question, and you have only to choose between two options on your screen, yes or no. I would like everyone participations on this question with me, and I'm gonna share the result right after you joining, and we're gonna give you 1 minute, or I'm gonna close the poll after about 70 people, 70% of the people participate. All right, thank you very much. And here's the result that you see. It's really interesting that you can see 98% people saying that they are doing just fine, which means that they're able to report and they're able to submit the report on time. That's interesting. There's a secret that we must learn from these um, uh, uh, audience. And just only 46, equivalent to 11% that saying that no, they missed the date, they unable to submit the report on time. And for these people, I would like to understand a little bit on the second questions. What was the biggest factor leading to the delay of your report submissions? And also similar, these are multiple choice questions, and we have four options for you. Was it because you and your team couldn't access to the system to perform the closing test? Was it because the data you need was not with you? Was it because your team couldn't promptly reach out to the other stakeholder to perform the reconciliations, or by other reasons? Or if you say yes at the first question, you can able to choose the last options. The last option is for you, and we're gonna give you 1 minute. All right, thank you very much. And here's the result from polling survey. You see, majority people answered that no problem at all. We did just fine, which means that you see, they are it's same as question one. A lot of people saying they're doing just fine, which means they don't have any problem with submission, the report on time. And if you look at the other reasons, the first three reasons, you see that 19% respondents saying that they unable to access to the system to perform the closing task, and 41% saying that they unable to access to the data for to perform the closing test, and 16% saying that they unable to perform the reconciliation with other stakeholders. So this are, I believe these are the main three, the main reasons for leading to the late submissions of the report. All right. Thank you very much. Thank you everyone for participation with me on the first two questions. And now, as promised, I would like to share a little bit, informations and insights from the survey that we conducted by Deloitte and others. The last 2 years has been very special to all of us personally. We're facing a lot of changes in our behaviors, and of course for the business is not an exception. We experience uncountable event where the normal workflow is interrupted, the future is uncertain, and those who want to work out of this must learn to adapt, change, and evolve. Every quarter, Deloitte and Fortune magazine send out a survey to hundreds of leading CEOs around the world, asking them to share their perspective on various aspects of the economy and their business. In January 2021, the CEO described the 2021 as the year of hope. Squarely, 85% of them indicated that their organization had significantly accelerated digital transformation during the crisis. 6 months later, our survey found out that their hope has evolved into bold plan for growth, innovations, digital transformations, workforce and talent transformations, and signaling a strong consensus among 155 leading CEO representative from more than 15 industries. The below number further explore their view and actions to harness the not yet to realize potential of digital transformations. As you can see, 74% of the CEO being asked indicate that they are undergoing or preparing for digital transformations. 66% of the CEO, sorry, 66% of the CEO saying that cybersecurity is on top of their agenda, not the cryptocurrency, okay, not the bitcoins. And 61% saying that they're gonna spend the spending on digital transformation is gonna be increasing. 61% of the CEO saying that they're gonna spend more money on digital transformations, and of course, 54% of the CEO gonna believe that they believe that they're gonna spend the money on the innovations and new product. Innovation and new product are the area they're gonna apply the digital transformation. These are the informations that the global survey conducted by Deloitte. At a smaller scale here in Vietnam, digital transformation in Vietnam recent year has achieved many remarkable achievements, although a real lift has not happened yet. In July and August 2020, the Vietnam Chamber of Commercials and Industry, VCCI, with the support from Japan External Trade and Organizations and VNPT, conduct a survey to evaluations the current situations of the digital transformations in enterprise amid the COVID-19 pandemic, from which they have developed the publications Digital Transformations, Solutions to Overcome the COVID-19 Pandemic and Accelerate for the Business. So what do Vietnamese enterprise expect to receive from their digital transformations, or why do they have to invest their money in something intangible or virtual? The vast majorities of the business expect to apply the digital technologies in productions and business would give them the outstanding productions and business activity, accounting for 98%. The biggest expectations of the business in application of digital transformations is ability to help them reduce costs, accounting for more than 71% of the business choosings. Also, because of the change in the work process, the digital technology is expected to help the business reduce the paperwork 61% by being replaced by electronic document management software and reducing the direct contact 53% when using online tool to communications in daily work with versatile utility integrating with solving many tasks in management. They are expected to be the key to developing efficient business structures with less number of employees, 51%. Less number of employees does not mean you don't have the job, okay? It just means that you have to move it up, move to the new role, learn the new skill, so that you can adopt with the new digital technology. And for production activity, digital tools such as robot, automation chains, IoT devices are expected to help business easily modernize and supplement value to production and improve the qualities of the product service. 45% believe that applying technologies, digital technologies, is going to help them to improve the qualities of their service and product. That that is the result of the survey last year by VCCIs and the with the support from VNBT and Jetro. Obviously, the questions for most enterprise is no longer whether to undertake the digital transformations. Rather, the more appropriate questions may be how to do so, with a focus on finding ways to work differently to meet the demand of an ever-changing, evolving marketplace. But digital transformation is not just about technology. The ultimate goal is to uncover opportunity to better address the human need by applying innovations, design, organizations, and digital technologies to existing and new business model. Making that happen require digital mindsets that influence every aspect of the business, including strategy development, talent development, operations excellence, and customer engagement. We believe that digital transformation could roughly divide into four phases, from exploring to doing, becoming, and finally being digital. They are different in terms of the scope and intensity of the impact on your business, operating, and customer model. When the organization's taken over overly technology-focused approach to digital transformations, the results are often piecemeal. Many end up in an endless loop of doing multiple disconnect digital things to extend their capability. So you look at the four stages of the journey of digital transformations, and you see that at the first stage, exploring digital. I believe that all the business are exploring the digital by leverage on traditional technology to automate it, your existing capability by automating some business process. That are the first stage of the digital transformation. You are exploring the digital. And the second stage, you see, doing digital is you leverage on digital technologies to expanding the existing capability, but still largely focus on the same business. Just simple like that. You think you're looking for the new technology to expand your skill set, expand your capability. I give you an example. Just for example, nowadays I see a lot of business can do the digital contract rather than the paper contract. Which means that it's allow the business to sign the contract digitally, electronically. They don't need to, bring it down, sign and pay. Give them another capability of doing so. Technology, digital signatures is the one thing that allow them to do so. Of course, and 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 the third phase, becoming digital. I believe that you leverage on digital technologies And these applications have to start to talk each other, synchronize each other, rather than from your IT infrastructures, you have so many applications and they don't talk each other. You have to let them talk each other, exchange data each other. So that is something you becoming digital. I met a lot of CIO and CFO, and one of the most common question they're gonna ask me, if I buy a new solutions, whether the new solutions can able to connect with my legacy system. That is the most common question that I received when I met them. And by letting all the application talking each other, you can see you becoming a digital enterprise, I believe. And the last day that you see, look at the being digital. I believe in this state that so all the applications in your business already talking each other from start to an end, everything digitalized. So this is the state that we believe that there's certain business can able to reach there on the journey of digital transformations. And with that information, I would like to understand a little bit by the last questions of my presentations. I want to understand where you are on this journey. So please help me. So on your screen, I would like to pose the questions. If the digital transformations is the key, at which stage is your organizations? And please give the answers to that questions, which is whether exploring, which is doing, becoming, or being digital. 1 minute, please. Thank you. Thank you very much for all the response for these people respond. We got 35%. Sorry, we got 35 people respond on this survey, and out of that, 19 respond saying that they are doing digital, which means that they try to looking for the digital technologies, the new technologies to expand their existing capability to doing the new things, which is they try to doing the new things. And 26% equivalent to 9 respondents saying that they just exploring, which is just the first stage. They try to automating a certain process within their business. And there's about quite interesting 20% equivalent to 7 response saying that they are becoming, which is these applications already talking each other. They don't they are not just a silo applications, and they start to interface on the same platform. It's really interesting to see that. Thank you everyone. Thank you very much for joining me. And so that was a lot of number and statistic, but specifically for us sitting here today, wouldn't rather think about the digital transformations of finance functions in more visual way. Let's watch a short video about the finance in the digital world, and I hope that you get what the future's finance look like.
Technology is changing the world, and in business, digital tools are reshaping almost every aspect of business. But how does it affect finance? For finance, the real disruptor is data, big data. The rest are just tools to handle the disruption. And the challenge for finance is to gain insight from that data faster. But it is impossible for finance to gain speedy and high-quality insights from big data using traditional methods. And they are currently unable to harness the potential of big data. What should one do? Enter cloud services, advanced analytics and in-memory computing to enable interactive visualization. The first step is cloud services. Big data requires computing power. Today you can get data support as a scalable, elastic technology delivered over the internet that goes hand in hand with existing solutions, as well as a flexible big data platform enabling the full stack of finance functionality. Advanced analytics is the second step. It enables finance to comb through big amounts of data in the cloud as well as on the premises and discover new patterns and relations hidden in the data. The third step is in-memory computing. In-memory computing refers to storing data to facilitate faster response time. Data is compressed and storage requirements reduced. The result? Speed and access to quantities of pre-calculated and unlocked data, which was previously hard to achieve. The final step is visualization. Visualization combines the various technologies and makes it possible to interact intuitively with data. It takes the calculated data and presents it graphically, which is easy to interpret and communicate. In short, it enables finance to explore data in depth faster, see patterns, gain insights, and pursue opportunities that were previously invisible.
The last few minutes, we saw on the screen the cloud services, advanced analytics, and in-memory computing, which all sounds unfamiliar and even scary, don't they? Let me put it in another way, the way we, an accounting and finance practitioner, talk about your work. I believe that the questions we put here, is going digital still an option for finance, is no longer a question for us. And to you, because the answer is loud and clear, yes, definitely. Accounting and finance is the backbones of all operations and organizations. Thus, no growth would be feasible unless the accounting and finance is equal, if not more invested, for them to evolve from the bookkeeper working all day long on the paper, writing, matching invoice and by hand, to the business partner who deliver insights and invaluable information for the better information decisions making. In the business reporting in digital world, published by Deloitte, we witness a remarkable discrepancies between what is going on the red column and what is expected to go on the bright green column. Why the management level would like to have their talent involved more in the discussions about its business and operations, that people unfortunately is up to ear with gathering and reconciliations and investigations differences between this number and that number. Sharing the same view on this matter, Hackett Group reported 69% participant in their survey complaining that the manual work is the number one bottleneck in closing and reporting process. Such tedious and labor-consuming tasks have also higher risk and error inconsistency, a claim by another research by census-wide research. Our survey showed that 54% of the management is not happy with the quality of their report, while 80% of them are concerned about the bad decisions that could be made on the basis of inaccurate and incomplete information, say CGMA. But how should finance go digital? The concept of going digital is defined slightly different from organizations to organizations, but our views on this is that at the end of the day, it should contribute to the freeing accounting and finance from repetitive and manual labor work. They should be enabled and empowered to bringing in value from anywhere they work with efficient supporting tools that facilitate further and deeper explorations of the information hidden in the data. These key five principles should be aligned with the organization strategies and on par with the IT infrastructures to maximize the benefit while optimizing the leverage on the existing capability. The first one would be the go paperless, which means that try to reduce the example that I just give you just now by reducing the paper contract to the contract. You already reduce the paper. Now you use everything is electronic. I I work at one business, the European one. It's about 15 years ago, and they already have the paperless system, which is all the application leave, all the administration paper within that business go paperless. They go to the system, they do things on that one. Not been there 15 years ago. And now I believe that a lot of business have their own system. E-office is system, electronic data interchange, for example. This help the business to reduce the paper and go mobile. I believe that it's going digital. You have to go mobile. Support your users, support your accounting, finance to be able to access to the data at any time and anywhere they go. And now since that we are the business partner, we have to travel and go mobile gonna help us to do the job much effective and efficiently. Go cloud. Migrate processing data to the cloud. Gonna be enabling the real-time collaboration from anywhere. And I believe that this is the future solution. You can store your data within your computers, and you see on the second question that certain percent saying that they unable to access to the data, but there's still small percentage of the people still store host the data on premises rather than put on cloud. A lot of ERP system right now, they already starting hosting the data on cloud rather than put on the premises, and provide the business can able to access everywhere at any time they want. And the last, sorry, not the last, of course, go automations is something about go digital. You have to automations. Automations just only able to start with the process of you must standardize your business process and then centralize your business process, centralize certain business process, and of course, you before you go to automations, standardize, centralize, and go automations is the last stage of the digital transformations in these situations. And of course, the last one I go analytics. In the video just now, you see that big data. There's a lot of insight if we're able to do connecting the dots, connecting the data each others, and provide more insight to you to making the business decision better. That's what the finance and accounting practitioner expect to do nowadays, which means not doing the reconciliations, not doing the manual work. We look at the data, analyze it, and provide meaningful report, valuation report, valuable report to the management to do the business. So how we gonna start? Plan your transformations. Here's the last topic of my sections. I would like to provide a little bit on guidance how the finance and accounting can address to the expectation from the management. You have to plan your digital transformations. That is something you could. Of course, planning digital transformation is not a job of a finance and accounting, but you can contribute on the board level, on the executive level in your company about using the technologies in the finance and accounting. That's what I mean. In planning for digital transformations, I roughly there are 4 stages, and I gonna go very quickly. I believe before you making any plan, before you propose anything to the board level or executive level, you must do the internal and external assessment, see that where we are, how the competitors and your competitors peer level that in the situations. Once you understand the situations, of course, that is in the second stage, you're able to develop the strategies and assess what gonna be the impact to the business. When you bringing the new tool, bringing the digital transformations, the business process gonna change, and how is it gonna impact the business is something that you have to do evaluations and propose to the board and executive level. And the last, again, not the last section, sorry, but the third phase, you have to prioritize all things, since that you already have the future state, the future state of your organizations, of your functions, and now you prioritize. Okay, within the next 12 months, within next 2 years, 3 years, and 5 years, what you gonna do? Which area that you want to automation? Which area you want to go on mobile? You have that plan. We call architecture business solutions, and fix fix solutions. Which one are you gonna use within the within your I mean roadmap, the roadmap that you have? And of course, the last stage, that is the there's I think that in the last stage there's two questions that you have to solve. Which solution that you're gonna use, and which implementation partner that are gonna help you to do that. And I believe there's a lot of information on the market that you can analyze and make your own choice. And this is very important. Can't be wrong, because choosing the solutions is really important, not just only able to help you solve the problem right now, but have to be aligned with your futures to be processed, or futures growing of the business. That is the critical. Picking some solutions, not just only help you today, but help you in the future grow. That is really critical. Okay. And the last slide of the day, I want to share with you the critical success factors, the key success factors. No two company the same. It's important to develop a strategy transformations, um, um, including industry and cultures and history. And in this one, I just want to share with you the four critical success factors that I believe everyone can can manage. You want to success, you need to manage these factors. Okay, you want your journey. You have the successful implementation, the transformation journey that you have. You make sure you manage these factors. The first one, I recommendations. My recommendations focus on the most time-consuming area first within your accounting and financial. Tell me which area is the most time-consuming task, and I believe that's gonna be close and report. Close and report is the most time-consuming in every business that I experience. Focus on that. Whether is there any chance for automations, for speed up the process to help you more digital. And the second factor you need to manage. I'm recommendations that be pragmatic on the technology choice. When you choose the solutions and try to use the build purpose built application. What does it mean? It's very simple. Don't modify the solutions. You choose the solutions and try to implementation that solution. Don't customize the solution for your own purpose, for your own use. Use the build purpose built applications. That helps you a lot. I met with a number of CIO, a number of CEO. They say, okay, I buy this application because why? Because it allow me to customize to match my requirements, to match my management expectations. So at the end of the day, they buy in they purchase the solutions, and then they keep customize add on customize add on, and at the end of the day, what happened? The performance of the solution is not good, and it's gonna be provide a very bad experience for the user. The user go to the system and the system keep routing, loading and loading. This is not really a recommendation. You need to manage this one. Buy the solutions, implement that one. Very limited customizations on the solution, please. And establish the digital transformations. Like I mentioned that you need to have the transformation program. You need to have the roadmap. What do you want to do within the next 12 months? What do you want within the next 2 years? What do you want to do within the next 3 years and 5 years? You need to have very detailed on that. Which solution are you gonna do to the future, to the to be process that you want your functions to be. And and the last success factors, I believe that you get inspired by other. And today, I happy to bring with you the three partner with me follow after. They're gonna demonstrate their solutions and how they're gonna help the accounting and the finance functions around the world. And I hope that you hear from them. You get a little bit inspired by their story, how they can help the accounting and finance around the world. Thank you very much. Hope that you can enjoy the three demonstrations from our partner today. Thank you. Have a good day.
Hello, my name is Gladys, Senior Solution Consultant with SAP Concur. You will probably have already heard of how SAP Concur have been helping organizations large and small manage their employees' travel and expense. However, for today's session, we shall move our focus towards another area of employee discretionary spend, accounts payable. In this region, we have seen a growing interest in finance looking to deliver AP automation in their organizations. And today, we will walk you through the journey of one such organization as they transform their AP processes. Our conversations with this customer started with their business stakeholders sharing with us the many issues that they face in managing their non-trade related spend. For their trade spend, which is critical to the operational aspect of the firm, they have sophisticated systems and software in place to ensure that processes are automated, users have visibility, and approvals are automatically routed to. This is in contrast to the non-trade spend, where the requirements have taken a back seat. While they have in place the processes and policies documenting each step in the procure to pay process, they face many issues executing them. This is further exacerbated with the pandemic, with countries implementing lockdowns and circuit breakers, preventing employees from coming into office, hence having to complete their work tasks from their homes. We take a look at some of these issues. Lack of a central P2P process with different business units and staff purchasing on their own via different methods. Manual data capture with business units and finance spending significant time doing data entry of invoices. No visibility over cash flow needs as there are often overdue invoices that finance does not even know about. Non-compliance resulting from finance having to manually do three-way matching between the purchase order, goods receipt, and invoice. Fragmented and paper-based workflows on vendor purchases, delaying invoice processing. And a lack of budgetary control as budget owners does not have real-time visibility to remaining budgets for their business units. As such, we have taken the opportunity to share with them how they can take a tech-enabled approach towards AP automation. These are summarized through four key principles. Firstly, digitalize and automate. Digitalizing hard copy documentation and automating the handover steps in AP processing. Delivering smart workflows, routing invoices for approval based on the unique requirements of each invoices. Data visualization, drawing meaningful reports and dashboard from the systems, helping organization derive business insight into your organization's spend and hence make informed business decisions. Embrace innovation, leveraging on available innovative technology to make life simpler for your employees. We take a quick look at a day in the life of Jane, a member of the AP team, and her colleagues, and how her work is made simpler and more productive through these four principles. Digitalize and automate. Jane starts off her day accessing the Invoice Manager dashboard. At one glance, she is able to assess her workload for the day. She has full visibility of all the invoices at every stage of the workflow, whether the invoices are waiting to be verified, assigned, reviewed, or waiting for manager approval, and how it measures against her KPI. As she assesses the list of unverified invoices, she is able to view all the invoices that has been received from the vendor. These invoices has been automatically digitalized through inbuilt OCR solution, minimizing manual data entry effort for Jane and her team. She can click on each invoice to verify the details of the invoices that has been captured. These include the invoice number, invoice date, vendor information, and tax information. At the line item level, information relating to the description, quantity, unit price has also been automatically captured. Once her check is complete, she sends the invoice to Grace, the invoice owner, for their review. Grace receives an email notification that an invoice has been routed to her for review. The invoice can also be accessed via her mobile phone or via the dashboard on the web browser. This is also the same platform that she uses to submit her expense claims and book her business travel. She sees the list of invoices that has been routed to her for review, and she clicks on each invoice to see the details relating to that invoice. As this is a purchase order related invoice, information relating to the invoice, to the purchase order, and the matching summary are displayed. The matching summary compares the invoice to the corresponding purchase order and the goods receipt and instantly displays any exception. If the cost for this invoice needs to be distributed to other departments, she can utilize the distribute function to distribute the cost accordingly. Complex distribution rules can also be imported in via Excel. She can then edit it and save it as a favorite so that she can access it again for future invoices. Once she has completed her review and update of the invoice, she can then submit the invoice for her manager's approval. Smart workflows. Organizations can leverage on smart workflows to automate the multiple handoffs among people and system. Set up the rules to define when an invoice is required to be routed to business stakeholders based on specific invoice criteria such as the cost center, the amount, or expense type. Grace's manager receives notification of the invoice that has been routed to her on her mobile phone. She accesses the Concur mobile app and sees the invoice from Grace. She reviews the details of the invoice, including the line item details, and finally, she checks the image of the invoice received from the vendor to ensure that the information has been captured accurately and completely. As the invoice is of a value below the threshold, it does not need to be routed for upper level review, saving time for the approvals. It is routed back to finance to do a final verification check before it gets transmitted back to the organization's finance system for posting and payment to the vendor. Data visualization. Leveraging SAP Concur's single reporting data warehouse, Jane and her colleagues are able to gain actionable insight into their bottom line, eliminating time-consuming manual effort. This detailed accrual report provides detailed information of every invoice in the system, enabling them to see what the status is, where is it, and who it needs to be routed to. As an added benefit, this can be automatically emailed to department heads to inform them on upcoming expenses. SAP Concur's comprehensive KPIs and dashboards also enables Jane's team to slice and dice spend data to assess how long it takes to process invoices, compare invoice and expense spending by department, and identify trends in spending with vendors. Embrace innovation. SAP Concur believes in adopting an open and collaborative approach to working with other solution and service providers that share similar values to our own in enhancing the employee user experience and helping organizations meet their business goals. You may already be familiar with our partnership with Grab, Blue Dot, Oversight with our expense solution. In the area of accounts payable, we have heard an increasing demand from companies to explore improvements in the following areas: to automate the capture of invoices in different languages and different formats, and to optimize cash flow by paying vendors leveraging on credit terms from corporate cards. To address this, SAP Concur has established partnership with Staple and CardUp, two companies that are headquartered in Singapore and are focused on delivering solutions specific to the requirements of organizations in Southeast Asia countries. Staple provides an artificial intelligence driven technology that reads, interprets, and extracts structured data from the vendor invoice at scale. Staple seamlessly integrates with SAP Concur, adding a layer of artificial intelligence that can process multiple languages with a focus on Asian languages such as Thai, Vietnamese, Simplified, and Traditional Chinese, and formats invoices without the need for rules and template. Leveraging on machine learning, it only loops in humans when absolutely required and improves capture outcomes over time. This enables finance teams to spend less time keying in data and fixing error, and more time adding value to the business. CardUp supports organizations in enjoying the benefits of card payment wherever they choose. For many organizations which are focused on growing their business, their monthly payments are growing. CardUp offers these organizations the option to use their corporate credit cards for payment even where these cards are not accepted. Organizations can have selected vendor invoices that are approved on the SAP Concur platforms, be integrated into CardUp, and with a few clicks, payment can be set up to be paid to the supplier via bank transfer. This offers organizations the option to hold on to their cash until the card bill is due. The benefits that accounts payable automation has brought to this organization comes in many folds. In particular, Jane and team has seen a 75% reduction in time spent on processing invoices. Standardized policy, enhanced budgetary control, and automated compliance check has also provided the organization with greater control over spending, reducing non-compliance by up to 60% and increase the identification of duplicated invoices. With all spending all processed in one platform, finance has gained real-time visibility over purchase commitments, liabilities, and spending. This also means improved visibility into cash flow, and this organization is now considering the option of leveraging financing options offered by our partner CardUp to optimizing the usage of cash. In these unusual times where the world is coping with the impact of the COVID-19 pandemic, this organization is seeing the benefits of having in place processes and solutions which are resilient to the difficulties introduced by the pandemic. It has also contributed to providing a supportive and happy environment to their staff. With global warming and an increased awareness on environmental issues, this organization is also placing an increased focus on sustainability efforts within their business operations. While storage of hard copy documents remains a statutory requirement in many Southeast Asian countries, in countries such as Singapore and Australia, they are able to reduce their carbon footprint in managing hard copy documents. We hope that through our presentation today, we are able to give you a quick snapshot on how your organization can also transform your accounts payable process. We recognize that every business is unique, and we look forward to the possibility of a deeper discussion with you and work with your organization to help you achieve your business goals. Thank you.
Hello, I am Andrew Bremner, a solutions architect at Workiva in Singapore. I am going to do two things today. First, tell you how Workiva can assist with finance transformation. And second, show you a quick high-level demo of the platform. Before I do that, who and what is Workiva? We have over 3,800 customers worldwide, including over 75% of the S&P 500. Why do they use us? Because we do three things for them. We connect data and focus on the last mile of reporting. We provide a platform for collaboration that transforms their processes and the way their teams work. And because we're on the cloud, we can provide the quick transformative benefits mentioned by Deloitte. So, what is the challenge faced by finance teams? If we think of the typical record to report process, data is extracted from source systems, collated, manipulated, and finally presented to different stakeholders. In reality, this process is extremely time-consuming, manual, confused, and disjointed. Data is not standardized and does not always come from systems. It is also collated by different teams over email and phone calls. The manipulation of data is performed in silos on different programs and formats and then brought together to support that final presentation. Changes to data need to be made to each and every instance where that data is presented. Review, therefore, is critical. Whenever changes are made, the whole process needs to be repeated again. So, what is the result of this? This results in today's pain points, which are across the operating model. Reporting processes are slow, repetitive, disjointed, and manually intensive. There is no clarity over who does what. Nothing is standardized or scalable. Colleagues suffer from low morale due to the high workload during close. In addition, they are not using their skills and qualifications to add value. Our systems do not do what we need. We cannot collaborate effectively or trace data between them. As a result, our data is disparate, out of date, and inaccurate, which leads to errors. Finally, this current state means we have to organize our teams in a way that is not compatible or fit for the future of work. So, how do we mitigate this today? Finance mitigates the as-is by creating new processes, specifically creating processes to control the root cause, which is unconnected data and the inability to collaborate. The bulk of finance's time is spent collating, manipulating, and validating data. We validate the data, check our presentations, call and cast our figures, update the end reports, and send them for review. This process is necessary, but it is inefficient, manually intensive, and time consuming. We all know what happens when data changes or if there are late adjustments. Everything is redone again. This mitigating process is not fit for purpose. The outcomes of the current state are, as we see in the right-hand side mentioned by Deloitte earlier, delays in reporting, errors and inaccuracies in the data, which means that we have a lack of insights provided by finance because there is no time to do anything apart from the manual work. And all of this leads to bad business decisions being made. So, finance now cannot meet its customers' needs because it is stuck in the manual world with no time for analysis. These operating model challenges are the major hurdle preventing finance from transforming. So, how can Workiva assist? Let's look at record to report again. You will see that the pain points in the middle are now replaced by Workiva. Workiva automates the extraction, collation, and manipulation of data and links that data through to your final reports. Whenever a change is made, it is reflected in the end report. Changes to data, late adjustments, calling casting, constant reviews, and rework are no longer needed. Workiva eliminates the manual effort in creating and finalizing your end reports. Finance now has the time to focus on adding value and becoming the business partner that stakeholders need. But to do that, you also need to collaborate. Workiva also acts as a platform to enable collaboration between teams, across departments, and also with your external stakeholders. You can collate data from other teams, perform reviews, share documents, and work together all on one platform. I'm going to jump into a very high-level demo here, where I want to show you two things that I've mentioned. Firstly, how Workiva connects data to end reports, removing the manual processes and data issues. And secondly, how Workiva is a platform for collaboration that transforms the way you work. Okay, so this is Workiva. It looks very familiar, doesn't it? And this is deliberate. It looks and feels like what you're used to using, which is normally Microsoft Office. This is to minimize any change efforts. And we use three types of files here. We use sheets, as you can see here. We use documents. Looks very familiar. A document here. And we also use presentations, as you can see here. Now, if we think of the reporting process, the extraction, collation, manipulation, and presentation, the documents and presentations, here's a presentation, here's a document. These are the presentational layer. This is actually what you provide to your end stakeholder, and this is the end report. So here is an example of a set of financial statements, the front half here and the back half with our financial figures. Here we are. And here is a set or an example of a management report with graphs, with charts, with narrative within it as well. So within each of these files, you will see discrete data sets. For example, here, net revenues, 115 billion, which are repeated within the same document. You see it here, and across different documents as well. So again, the same figure within our financial statements. These data points are linked back to a central master sheet. This master sheet, as you can see here, represents at a high level the manipulation stage of record to report. This is where we massage the data into the format required for presentation and link it to the end report. It's also where we can collate other system data, other source data, from different teams and collaborators and link them to the end reports as well. Now, if I take this figure here, net sales, which I mentioned earlier, 115 billion, I can see through the linkages that it links and appears 40 times across these different end documents. So the annual report, which we've seen, the earnings presentation, etc. Now, if I change this figure in this box and then publish it, any change will get pushed out to each of those end reports. I'm going to do this in a minute using the source data refresh. So if we go back a stage and record to report, we get to data and extraction. So we get to data extraction and collation. I'm not going to talk in much detail here, but I want to show you an example of how quickly we can extract data from source systems and refresh it through this master sheet to the end reports. And this is going to be done using an automated chain. And I'm now going to run this chain here, you see. What I want you to note is that this is an extremely fast process. We're currently extracting and collating the data here from the different systems. And then we will be pushing that out into that master sheet. What this means then is that for a number of our customers, this has been a reduction in days worth of effort for them by reducing and eliminating the manual work that's required. And it means then that you're standardizing the process and therefore creating that data lineage, which means that you can always trust the source, the veracity, and the history of your data. In addition, if you wanted to check the history of the data within your particular sheets, you can do that. So here, for example, I'm looking at the cell information to see who has made a change, in this case, Frankie, what the change was, and when that change was made. Very shortly then, this figure here in the middle, this net sales figure, will refresh, as will all the other figures within the financial statements here, because they are being pulled directly from the source systems. So let's give it a minute. And here we are. It is now refreshed, okay? Now, if I were to press publish, I can now publish to all the 216 places where this figure appears. So I'm going to publish that. And now when I click into my board presentation, you will note, there you go, that the figures have updated. So our figure has gone for net sales has gone from 115 billion to 213. The charts, the tables have updated automatically, as have the conditionally formatted narratives, so for increase, and also the arrows that you see here. This means then that you can trust the data, it is linked back, and you've also eliminated the manual work required in ensuring the consistency and accuracy of your data across your end reports. But this is only half the story. As I mentioned earlier, Workiva's other power is in acting as a platform for collaboration. If we think of our end reports, let's say, we know that information doesn't always come from systems. So take these financial statements, for example. We know, for example, that the chairman's statement, well, that's normally written in by a particular committee or by the chairman himself, etc. So the way we support this is within a document, you simply create permissioning. So here I can create permissioning to ensure that certain teams and certain people have controlled access only to the areas that they require. So you can set that by viewing and set that by editing. Okay. And in addition, to enable collaboration, we also allow teams to house their source data, the data they require, to be pushed out into their own reports within this master sheet as well. And this can then be linked to those end reports. So whenever they make a change to, let's say, the master narratives, it is pushed out automatically whenever an update is made. Because Workiva is on the cloud, it is a platform for collaboration. All the work within your team and with other stakeholders can now be performed here. And if you look at these various ribbons on the right-hand side, I want to just quickly illustrate how this can support teamwork and collaboration. You can set tasks, for example, create comments, add attachments, track changes, assign reviewers, and more. Workiva, like any best-in-class cloud platform for collaboration, enables that full transparency and participation of collaboration across teams. And that therefore means that you only need one platform to transform your data, as we've seen, your processes, your people, and organize the way that your teams work. So I'm going to now just go back to the presentation and just step on that once more, which is, what do we get out of this as a result? So from Workiva then, you can trust and control the data by standardizing processes. You can report faster because data is now linked from end to end and there are no more manual processes. You can in fact report on a real time. Workiva is a platform for collaboration, which therefore allows you to work with your colleagues to then focus on insights. For finance, crucially, we have got rid of the biggest block point, the biggest choke point for finance processes. We've got rid of the manual, so finance can now pivot towards acting as that business partner and collaborate with different teams across the organization to partner to create insights. And all of this means, at the end of the day, that finance can start its transformation journey on a scalable platform. That is the end of my presentation. And now I'd like to welcome any questions from yourselves.
Hello everyone, I'm Gabriel, a solutions consultant at Blackline, and today we're going to talk about automating your closing and reconciliation, as well as new opportunities in a time of transformation. Do feel free to scan the QR code to connect with me on LinkedIn. Looking forward to speaking to you all on a one-on-one basis. The Southeast Asian region has been seeing rapid and sustained efforts and investment into various digital economic initiatives by both the public and private sectors. Tech giants have been creating waves, most recently the Tokopedia-Gojek merger, and Grab pushing for a US SPAC listing with a valuation of over $40 billion. Backed by a stable political climate, progressive economic policies, and sustained growth, Vietnam's economy is primed for digital growth. And your economic vitality, as this article by TechWire Asia states, hinges on digital transformation. Disruption has essentially changed how accounting runs and operates. This is because traditional manual accounting is actually chaos. You have data sources in different places managed by different teams or departments. Unifying and reconciling all this data requires extensive use of spreadsheets and a huge amount of manual repetitive work. You have various reporting requirements from different stakeholders, from financial reporting to management reporting to various compliance requirements. Let me elaborate, right? You have priorities. Your leadership has priorities. And this grid accommodates what most CFOs and financial controllers try to get done. But the common thing here is that you need capacity, more specifically human capacity, to get all these things done. You want the right people in the right places. And the opportunity to achieve these objectives is ahead of you. The traditional way to doing accounting leads to very high peak periods, which leads to low financial and accounting capacity during that period. What we want to achieve is continuous accounting, where the work for strategic initiatives and the modern financial virtual close is more granular. Similar to how governments were talking about flattening the curve for the COVID-19 virus to reduce the strain on the healthcare sector, we want to flatten the curve to reduce the monthly strain on finance and accounting teams. This can be done by adopting a virtual close. And with this flattening of the curve, virtual close technology like Blackline can assist you to be more compliant and optimize your business processes, thereby enhancing your overall capacity and helping your finance and accounting teams move upwards to align more to corporate strategy. Let me bring you through how this can be achieved. The key to a virtual close is to have full visibility on every step of your close activities. This can be done through Blackline's customizable dashboards and reports, as well as task dependency tree. Let me give you a quick overview of what this looks like in Blackline. What you will see on your screen now is the landing page of Blackline. You have various customizable dashboards that allow you to have complete visibility of your financial close. You can even go to the analytics view to view in greater detail the reconciliations and tasks that need to be done for the month end. Furthermore, you can drill down to the dashboards to see specific reconciliations issues if required. This enables you to be more proactive instead of reactive in your virtual financial close. So let me bring you to the task grid. And this is where we can keep track of the various closing activities using our task grid. This is a list of tasks that needs to be completed by the end of this closing period, which is June 2021. So what we'll do is that we'll actually work with you to build out a dependency tree like this one, where activities can be auto-certified at the parent level. There's roll-up functionality, and essentially all your month-end closing tasks can be tracked step by step. Next, I'll show you how you can achieve greater balance sheet accuracy and control from the comfort of your own home. So I'll now go into an example of amortization template that we have. Let me try to find it. There you go. Right here. So what you'll see here is actually the face of a reconciliation template in Blackline. How this helps in your virtual financial close is that it helps to standardize the processes from your various business units in your organization itself. So at the top here, we have our permanent accounting information. So what I would like to highlight here is this template over here, which is an amortizable prepaid template. So within Blackline, we have a various list of standard templates which our clients around the world actually use in order to help to standardize and accelerate their virtual financial close. So what we'll be looking at today is both a amortizable prepaid template and later on a bank account template. What we can also help you to accelerate your virtual financial close is our auto certification settings. So this is a list of pre-built rules. Let me give you an example of one of the rules. Say the first one, all balance zero, no activity. So if there's no activity in the period and the reconciliation balance equals to zero for the specific account, what Blackline will help you to do is to auto certify or auto reconcile the specific account. So down here, we have our assignment settings, which shows you who the approval of this reconciliation is. So Blackline's embedded workflow has up to 5 levels of approval, which can be configured based on various dimensions, amounts, etc. We also have the purpose and reconciliation procedure for this specific reconciliation. So let me scroll down. What you'll see here is my amortizable line items for the period. So I actually have an unidentified difference of 5,000, which is taken from my GL balance of 68,000. This is taken from your ERP system and minusing what my amortizable items are. So which gives me an unidentified difference of 5,000. So what an end user needs to do is to essentially explain this $5,000 difference. So I'll go ahead and add an amortizable item. Say one of my finance colleagues forgot to tell me that there's a property tax bill that came in that needs to be amortized. So I'll go ahead and key in the transaction amount of $5,000 in the amortization start date and end date. Add a description, say property tax bill. And I can also add comments and documents all in the amortization item itself. So I can go ahead and save. So what you'll see is that my amortization difference, my unidentified difference has been brought down to 0. And Blackline has essentially auto-calculated the schedule for me for what needs to be amortized in this current period. So right here. So these are the journals that can be exported into Excel right here and uploaded back into your ERP if required. So let me go back to the face of the amortization. So I can also add comments and also add supporting documents, whether it's an Excel file, a Word document, a PDF. So I'll go ahead and add add a property tax bill, per se. Say a Word document. Okay, and add it in. So as you can see, anybody who needs to approve this will be able to see the property tax submission Word document and download it when needed. So down here, I also have my certification statement, which ensures that there's accountability on this specific reconciliation itself, and an e-signature down here, which has an audit trail that's traceable. So if I go ahead and certify, this will essentially be routed to the approver for approval. And there you go. That's how we help to accelerate your virtual financial close. So finally, let me show you how we can help to further automate your virtual financial close, and how we can help you to automatically reconcile high volume transactions. Some examples of such transactions are, say, accrual reconciliation, AP reconciliations, such as a three-way matching between your purchase order, goods receipt, and invoice, AR reconciliations of sales invoices and collections, or even bank reconciliations of bank statements and your GL, and many more. So today I'm going to show you an example of a bank reconciliation, but essentially Blackline's transaction automation can help you in numerous areas of your financial close. So let me go back to view reconciliations. Go to Commonwealth bank account. So before I go into the specific reconciliation itself, I would like to show you that this is essentially another one of our templates, a bank account template. And how we help to automate this transaction is by using this thing called our pass rules. So we can take in data sources from your ERP, your bank statement, your point of sale system, your credit card, or any other systems, and even Excel spreadsheets. We'll pass them through this thing called our automated matching engine. And our pass rules can read one-to-one matches, one-to-many matches, many-to-one matches, and many-to-many matches. And what it will throw out is that unmatched items as well as matched items. And this all lie on the back of our account reconciliations module. And we can also automate journal entries if needed. So let me show you how this is set up. So first I'll go into my match set. And this is completely user-driven. So it doesn't need IT intervention. A finance team member can actually do this. So you just key in the match set name, the description, and what account is tagged to. And here I have two data sources, right, which can be uploaded as Excel or can be connected to your ERP using a SAP connector, Oracle connector, or any other ERPs that you currently use. So I have my deposits per bank here and my deposits per GL here. I can set up who the approver is, but what's key here that I want to bring you through is this pass rules here, right? So let me highlight one of the pass rules. Say this pass rules essentially compares the date, the amount, and the check number field or reference number field in both of the data sources. And if all this field agrees, it will create an automatic match. So let me show you how this automatic match looks like. And go into the automatic matches. Give it a second. So let me show you a one-to-many match. Say check number and amount one-to-many. So let me go into one of the transactions. So what you'll see here is that up here, I have my bank file, essentially my bank statement, which has a bulk payment of 67,000 and a check number of 55821, right? As well as the date. And down here, I have my GL file from my ERP with 4 different invoices, which sum up to this number of 67,000. So Blackline has essentially automatically matched one-to-many using the amount, the check number, as well as the date. So another special feature that we can do for you is suggested matches. So very often there are fees in transactions or there are FX differences, right? So what we can do for you is that we can suggest a match to the end user, and the end user can decide on whether it should be a match or not. So let me go into one of the examples. So similar to just now, I have my bank file up here and my GL file. As you can see, there's a $1 difference in the amounts. And essentially, it has used the pass rules where the amount plus minus $1, it will throw out a suggested match. And all the end user needs to do is either approve or reject this match. And finally, my unmatched transactions. So let me give you an example of what we can do. So let's say actually this $5,000 and this $5,000 here, as per my deposits per bank and deposits per GL are supposed to be matched. But what happened was that the check number actually came into the bank, but my finance colleague forgot to key in the check number. So what he can do is that he can check off both $5,000 and go ahead and match it. So I can put a reason code if I want, but I'm just going to put it as none. And there you go. And another thing we can do is that, say all these are actually bank fees, right? Which I want an automated journal passed back to my ERP as they are just bank fees which require an adjustment. So I can go ahead and create an item. So I'll create it as a bank item, as a summary item, sum them up, and they're requiring adjustments. As you can see here, I can attach it to a journal, and this will essentially send the journal back into your ERP automatically. If not, I can go ahead and click save, and it will essentially create an adjustment item back into the ERP if required. So that is how we can help you to do automated matches. And to drive your business, Blackline's unified platform, together with automation, can improve your virtual close process if required, mitigate risks, and also help you to give full visibility of your financial close. So amid all the accounting chaos, Blackline can help you to streamline your virtual financial close by automating various processes and also giving you full control and visibility of your business. And that's all I have today. Thank you.
Thank you, Joe. Thank you everyone for staying with us until now. Thank you all partner for sharing information and your story on helping the accounting finance around the world to transform their functions. In my last sections of the day, I will provide the information how Deloitte can help you to help you on your transformation journey. We are the accredited implementation partner for all three solutions above. If you're interested in any of above solutions, feel free to reach out to us. We can able to help you in several ways. Of course, the first one, I believe that we need to arrange for a detailed assessment. That what we call the AA assessment. We would like to obtain the current process uh, and obtain a little information to help us to to prepare a detailed demonstration for you to see how it's work. If you put the data into the solution from start to beginning, how you feel it for your user to see it, that is the detail in demonstration that we're able to help you. And of course, after the detailed demonstrations, you decided to implement the solutions. We are the implementation partner, can help you to configurations the solutions to meet your requirement and integrate it with your system. That's what Deloitte can help. And here you can see that a few bullet points from end-to-end support that from the slide here. We as I just mentioned just now, the we come to you not just based on our local experience, but we come with the global material, global digital maturity model, provide the view across all capability that helping you could make the leap from evaluation to actions. We have the the three steps. The first one, imaging, like AA assessment and deliver, and of course run the solutions to support, provide the support you to run the solutions as well. And here are the contact in Vietnam. As I mentioned, if you interested in any of those solutions, feel free to reach out to us. My name is Te. Thank you very much. Thank you everyone. I wishing you have a good day today. Goodbye.